morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, November 14th. So imagine next week we got Thanksgiving here. We got a lot of economic news releases scheduled today, so we're going to jump right into it. We'll start off with the retail sales for the month of October. We had a 1.3% increase for the month of September. We figured tamer down a little bit, about negative 0.1%. And it came down to 0.3%. So it's a negative 0.3% for the month of October. So when you strip out autos, because it's got the volatility of the large ticket items, that's kind of what the main number we kind of look at. We had 1.2 for kind of in line with the regular retail sales for September. We figured it would come down to about 0.3%, and it came down to 0. So we had, if you take out autos, basically there's no sales for the month of October. So it's kind of like a nil there. Producer Price Index. This is the PPI, or the wholesale inflationary numbers. So we'll have to see what our wholesalers are, if the prices are going up on them. So back in the month of September, we had a 1.1 increase in there. So for the month of October, we figured it would drop down to 0.2 and actually went negative. So this is kind of showing deflationary numbers right here. And then we'll strip out the food and energy, which creates a volatility for the inflation numbers. So now we get the core PPI. And so we had a 0 back in September, and we figured it'd go up about 0.1%, and it actually went to negative. So again, right now we're having bad retail sales numbers, and then inflation numbers are looking positive, but maybe not too positive, because it's actually looks like it's going backwards, or otherwise deflationary, which means prices are coming down and stuff. So that we got to keep an eye on, so we don't have, hopefully, stagflation coming up here shortly. So that's something they don't put a lot of weight into the wholesale, because what happens is if they go up, their inflation numbers go up in wholesale, it doesn't always get passed on to consumers. So the main numbers they're going to look at is the CPI and the PCE reports, and how they're going to look. So if we see deflation numbers, that's something to kind of watch out for. And we do get the CPI number coming out tomorrow to watch for. So we have the next item to note is inventories for the month of September. So in August, we had a raise of 0.6%. And then for the month of September, went up 0.7%. So people are stocking more inventories in the month of September. And then later today, we got by 11 o'clock Pacific Standard Time, we had the Fed minutes from back in October 23rd. So this could be a market mover, depending on what's being said in those minutes, what was being discussed at their meeting. So this could be definitely a market mover. So stay tuned. It could get a little volatile a little later today. We'll jump over headline news. And right now the stock market's down, primarily because obviously retail sales are down, inflation numbers are good. They're still concerned about the anxiety over the fiscal cliff, which is the next item here. So there's still concerns about that, just because Congress and the president haven't seemed to, through his term, haven't really come to any conclusion where they can really work together. So there's not a lot of trust there right now, and so things may be begun. So this could help. And this could, create a lot of issues down the road here. All right, so we'll jump over to the bond market, see what's going on over there. So without negative news on the stock market, it's kind of going into the bond market. So, we're kind of like Grim Reaper when it comes to stock news. So we started the morning off about 18 basis points lower, and now we've kind of made that up. So we're basically at the point of interest rate wise where we left off yesterday. So we had a bit of a drop, as you see here, yesterday in the rates. Rates went up, so the bond market went down and the rates went up. And we would started off worse, but then we made up that ground so far this morning. So hopefully we get this above here. Has its potential. If we don't close up above the 105 level, we could see a drop down, back down to this level again, like we had a couple of weeks ago. But with some of the news that we have this week, it's possible that we could see improvement here, maybe even knock on. Some people are in the industry kind of thinking that maybe you might be knocking on the 106 level. So, all right, folks. So rates are about the same where we left off yesterday so far today. Watch later today for, again, Fed minutes. It could create some volatility in the markets. All right, have a wonderful day. Thanks for watching, and I will see you guys tomorrow. If you guys like these reports, just again stop by mikesdailymarketreport.com and subscribe, and you'll have these emailed to you on a daily basis. Have a great day.